Hey, what's going on, everybody? Welcome to Bonafide Investing, where we talk all things high yield investing, options, as well as investment ideas and investment goals. If you're new to the channel, welcome. This channel has been live a little over 4 months now, and I've been experimenting with high yield strategies for about 2 years now. And I built what I call an all-weather high yield portfolio using about 20% of my net worth that seeks to, number one, pay my bills, number two, maintain and pay down my margin over time. All money that comes out of this includes every single one of my bills and expenses, and all the distributions stay in until they're needed to pay those bills. So this is not the only way, excuse me, I invest. This is not the only way I would suggest anybody invest. So again, nothing here is investment advice, not now, not ever. So please do your own due diligence before making any of your own investment decisions. And although I was once a financial advisor at one point, I'm not responsible for your wins. I'm not responsible for your losses. Hope you all had a nice weekend. They sure do fly by. So wanted to talk about the week ahead, kind of talk about some things going on in cash flow life, excuse me, and just go from there. I'll definitely be making a portfolio update on Saturday, just kind of, like a week review recap. But man, these markets, extremely unhealthy in my opinion. Today, we've got the loan bonds are pretty much flat. Indices were flat. We have actually opened down, and now we're pretty flat for the day. Gold is down, and real estate was slightly up. So just some of the things going on to kind of open the week. When the administration could come out and just say one thing, say another thing, and these markets just move so violently, that's just, it's really concerning to me. I've been investing over 20 years, and this is one of the most frustrating markets, right? But, I did have some good conversations over the weekend. I know quite a few people who are just doing nothing right now. They're literally sitting in cash, and they're so frustrated by it. They were telling me how they're just like, yeah, we don't want to invest right now. We'll wait for a better time. Well, teach their own, and as frustrating as these markets are, complaining about anything gets us nowhere, right? The CPI or the CPI, it's rigged. I need people to show me more evidence that it's not rigged than that it's rigged. The reason I say it, I live in the real world. I go to the grocery store, I pay bills. You want to tell me inflation's at 3%? That's completely laughable, right on every level. But you don't complain about it, right? There's ways to, handle inflation risk, right? Sitting on the sidelines, in my opinion, is never a good thing, especially if you're living out of a high yield account, right? I can't simply just go to cash. Why? You're losing no matter what. You go to cash, you're losing 5% minimum every single year, right? If you look at John Williams' shadow stats, the real inflation numbers, probably 10%, right? I believe it's at least 10%. So again, guys, sitting in cash won't get you anywhere. You can be frustrated by markets. You can be frustrated with data, whether you believe it or not. But at the end of the day, don't complain. Use what you're given to be a good investor, right? There's going to be ups and downs, highs and lows. That's just how it goes, right? But again, our goal here is to do what? It's to live out of a brokerage account. It's to use high yield ETFs, use options to provide enough cash flow in order to do that. What I did, I put in some limit orders for my SPY and QQQI, just expiring the end of the week. I want to see if they execute. It'll be interesting. Just pull out a little extra income out of those if I can. Otherwise, I'm probably going to sell the May 15th calls on them, again, just to generate extra income on top of the dividend. It doesn't matter if they're called away, right? They'll be called away above my cost basis, and I'll just buy them back, right? So I'm trying to just squeeze a little extra income out of some of my ETFs. Nothing else really. I haven't done much else today. I'm looking to I might sell a put on Realty Income, might start the wheel on that again, and looking at Johnson & Johnson for a potential poor man's covered call. But other than that, not a lot of changes. Like I said, the market, we were down big in the futures market last night, recovered quite well. We even popped to the positive for a little bit this morning, but we've been pretty flat overall. So gold, I want to talk a little about gold today, gold and silver. I'm a firm believer gold's going to be at $10,000 an ounce by the end of this decade. I think in the next 3 to 4 years, we'll see $10,000 gold. I really do. If I'm wrong, I'm wrong. But in the short term, gold and silver are behaving like risk assets. That's not a good thing. They're behaving like equities. Um, that tells me that they are not healthy markets right now, right? Gold and silver aren't behaving as they should, as they historically have. So I think short-term gold and silver will pull back. If silver and gold pop this week, I'm going to buy a put on silver, probably on SLV, just to hedge my downside for another silver holding I have outside of Cash Flow Life. But yeah, I think if silver gets to 80, that might be a really good time to buy a put on it, maybe like a three to 6 month put, just to hedge, right? I hold silver in other accounts outside of Cash Flow Life. I hold silver in other ways. So I like to hedge it at times, but I do think gold and silver will head down lower. I think silver can get as low as 40 to 50 bucks. I really do. I think we'll test that breakout right around the $50 level. We'll test those as a new floor for silver. I think gold could get down to as low as like 3,000, maybe 3,000 to 3,500. And if they do, that's just a great time. I think I might add a little bit, especially in like numismatic form or something like that, right? I think those would be good levels. So again, gold was a great hedge at 2,000, even 3,000. Is it at 4,500 or 5,000? Not as much, right? So it's funny how people will suddenly pile into something to hedge once the opportunity has come and gone, right? So until gold decouples from the stock indices, I'm going to stay away and even potentially short silver. I don't really short gold. I never have shorted gold, not once. I've sold gold, right? Like I sold out on my gold miners, about a month ago, but I've never shorted gold. I don't plan on shorting gold. It is my favorite asset, but it's also insurance, right? At the end of the day, if you're just sitting in gold and cash, you're not really generating much of anything, right? Much income. And you're kind of just, I think, at a standstill. So yeah, gold will always maintain your purchasing power over the long term, but I'd be really careful here in the short term. Real estate REITs, they've been a little frustrating, probably because, again, interest rates have been frustrating. They've been all over the place. I might add, like I said, just to sell a put on O, see how it does for this month, and go from there. So happy with the ulti-salty positions, really happy with that long short. Man, I've seen so many days lately where they're both in the green even. I've seen some days where ulti's up 1% and salty's up 0.5%, or salty's up 1%, ulti's up 0.5%. It's really been interesting what YieldMax is doing there. And I don't know if these funds have necessarily turned a corner, but I've been really pleased with them and just keeping them for that high cash flow. And I know over time, nominally, those cash flows will come down, and I'm fine with that. But I'm trying to use that cash more strategically across, other ETFs, buying and selling options, what have you. Wouldn't be surprised, guys, if we ended up higher this week. I mean, nothing surprises me in these markets. I personally don't think there's a lot of upside from here. But if markets do break through resistance, and interestingly, there's not a lot of resistance to go. I think if the S&P breaks through 7,100, the NASDAQ breaks through 24,500, I don't know. I think we could be headed to all-time highs and new highs. So nothing surprises me. Historically, war has been stimulative for economies, but I don't think it's the Iran war that's going to break this economy. Right? I don't know if it's private equity. I don't know if it's the Japanese yen carry trade. I don't know if it's a combination of a lot of things, but there will come a point when this whole thing unravels, right? The complacency in these markets, the resiliency, it just baffles me each and every day. So when, nobody knows. I'm not going to give you a date. Nobody should give you a date, but it's coming. And I'm going to stay hedged, right? And I think that if the markets do go to all-time highs, we do push much higher. I think the best play right now, I don't know if I'll add so much to YQQQ the higher we go, or salty, but what I'll probably do is I might buy more puts on QQQ and SPY, right? If we do continue to climb. So we'll see. Those are some of my thoughts there, what I might do regarding those positions. But at the end of the day, right, it's God's all that matters. So stay close to him, especially in these times, these very uncertain times. I think 2026, we have a lot of volatility ahead still, very tumultuous. So be wise. I think it's need over greed. So be aware of your risk to the downside more than how how much you can grow or outperform something. And ignore the noise, right? Politicians and bankers, they just care about themselves, right? Stop fighting with your neighbors over whose sociopath in Congress or the White House is a better choice, right? Who cares, right? These people don't care about you. Stop caring so much about them and do what God calls you to do. So those are some of my thoughts on the week ahead, guys. I will be making a video Saturday at the latest, and hope you got something from today. Have a great day.